option traders. So for today's trade, we're looking at an option strategy known as a butterfly in Airbnb stock. Taking a look on MarketSmith, the stock has had a decent rally since the start of this year, along with most of the market. Earlier this week, shares retook support at the all-important 200-day moving average, but shares have slipped slightly back below this level since then. The stock holds a mediocre 74 EPS rating and a very low 22 RS rating, which suggests that there is still some weakness here. It's possible that the stock continues higher above the 200-day line, but we're not in the clear just yet. Equally possible here is a pullback to prior levels of support, as the stock ultimately meets resistance at this level. So today we're looking at an option trade that will profit if Airbnb comes back down towards the 50-day moving average in the next week or so. A butterfly is a limited risk, limited profit trade, but on a typical butterfly trade, the profit potential is higher than the potential loss. And in the case of today's trade, it's a lot higher. So placing the trade out of the money means that it can be done for very low cost with a large profit potential. Butterfly spreads involve 3 different option strike prices, all with the same expiration date, using either calls or puts. So for today's trade, we will use puts to reduce the risk of early assignment. Let's take a look at my trading platform and set up a real-life trade using Airbnb.
So looking at Airbnb here on Thinkorswim, the stock is currently trading around 109 a share. And to set up this trade, we're going to first select Butterfly as the spread type in this box if you're using Thinkorswim. We're going to be looking at the February 10th expiration date. And we've got our strike prices all set up here. We're going to choose this one because the middle strike we want is 100, and we will adjust the other 2 strikes. And we're going to be on this side of the screen, which has the prices for puts. So we're going to adjust this strike price to 105 and this strike price to 95. And to recap the entirety of this trade, we are looking to buy 105 put, sell 2 100 puts, and buy 195 put, all with the February 10th expiration.
We're looking to buy 1 February 10 put with a 95 strike, sell 2 February 10 puts with 100 strike, and buy 1 February 10 put with a 105 strike. The total cost of this trade is $65, and that is the maximum loss potential as well. The maximum gain is $435, which is calculated by taking the difference in the strike prices minus the premium paid. If Airbnb doesn't get down to 100, then the investor loses a little, but you have the potential for a large payoff if it does hit 100 in the next 10 days. As for trade management here, there isn't much to do with a trade like this. It either works out or it doesn't, so investors should be okay with losing the entire premium paid before entering the trade. As always, remember that if you're new to options, make sure you practice with a virtual account before risking any real money. And remember that options are complex and investors can lose 100% or more of their investment. Check out the new Option Trader app from IBD for digestible options education and tons of great trade ideas. And be sure to join us here for our regular options content where we discuss and break down new trades every day.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.